What's up, guys? It's February 5th, 2025. We had a sell off and then a rally. Is this bar one? Yeah. Sell off and then we rallied. I think this was a news bar. Pretty nice rally. A lot of the days, if you look back, we've had like a rally sideways, rally sideways, rally sideways. That's also three pushes up, by the way. I was looking at the daily chart. Here's the daily chart. Yesterday's bar closed bearish, but we still had a rally within it. Leg one, pull back, leg two, pull back, leg three. So that's three pushes up, and we're coming into this previous swing high. Bulls definitely want to take the swing high out, take this swing high out, and go for new highs into whatever is up there. Here's the 15-minute chart on the right side. So this is the overnight session. Okay. Overnight session, really nice by the close rally. I say really nice, but there's tails right here. Those two tails can signify pullback, so just counting the tails and not in between. I'm counting three legs. Leg one, pullback, because it rallied here and sold off. So that's how the tail was formed. Leg one, pullback, leg two, pullback, leg three. And then we actually get that visible pullback here, being whatever bar number that is. Leg one, pullback, leg two, trend line break, so you got to count that as a new leg. Leg one, pullback, leg two, pullback, leg three, climactic price. What is the time? 6:45, 6:30. Okay, so yeah, so that's that morning pullback. That's this pullback right here. I don't know if I like the gaps on the chart. I kind of like just looking at a clean chart. You can turn it on later. So we rally. We have a deep pullback, leg one, pullback, leg two. Testing the breakout point of the overnight session. Actually did not catch that intraday. Then we have that three legs higher. Leg one, pullback, leg two, inside bars, breakout mode, pullback, leg three. That's a loose count. You could also say leg one, trend line break, leg two, trend line break, leg three. Look at the third leg. Leg one, pullback, leg two, pullback, leg three. Someone shared a really cool excerpt in the Discord today talking about it was from I haven't read it yet, but it's from Al's third book. He talks about breakouts and how it's really important to just focus on breakouts. I'm just gonna pull it up. It's right here. This is why I focus on breakouts. The market is always trying to break out, and the market tries to make every breakout fail. This is the most fundamental aspect of all trading and is at the heart of everything that we do. Every trend bar is a breakout, which might have follow through and succeed, or fail and lead to a reversal. Even a climactic reversal like a V-bottom is simply a breakout and then a failed breakout. The better trader becomes at assessing whether a breakout will succeed or fail, the better position they are to make a living as a trader. Will the breakout succeed? If yes, then look to trade in that direction. If no, and it becomes a failed breakout, which is a reversal, then look to trade in the opposite direction. All trading comes down to this decision. This is why whenever someone asks me like, oh, what should we be studying? What should we blah, blah, blah? I always say breakouts because the market's either breaking out and reversing, and a reversal is just another type of a breakout. So that's just my 2 cents on what, I don't know what just led me to read that, but I think it's really important people understand that the market is only breaking out and reversing. And the better you can understand that, the book says it, Al says it, the more quicker you stand to make a chance making a living, making money. Every bar is breaking out. 27 tries to reverse, it fails, and that becomes a pullback, breaks out. 33 through 36 is a breakout, but what is it breaking out of? Not much. 30. So these 4 bars are breaking out of this range. So 29 is low. Bad breakout, goes for reversal, and bulls get a new high by the end of the day. Everything is breaking out. Yesterday we had that rally, sideways price action. Today we open up with a sell. What is this? Bar 3, bar 2, bar 1. Okay, so this is bar 1 right here. Small bear bar. Finish completing the leg 1, leg 2 move from yesterday. Leg 1, pull back, leg 2. Second leg trap. Second leg trap. Bar 2, pull back, testing the breakout here. It's more like testing the bulls that bought here are going to buy more here, and they're going to get out their previous entry. So this bar 2 gives them that chance to get out their previous entry. Look at bar 3, 4, and 5. They're slowly growing in size, and the bar 6 becomes climactic, so it rallies back. So bears have to take profits. We can also see a small 3 legs lower, leg 1, pull back leg 2, pull back leg 3, pull back leg 4. Climactic trading range price action after leg 3. Strong rally. Again, testing the breakout point. I really wanted to sell the low of bar 3, I think, or bar 4, but this was a news bar. But that also completes 3 legs down for the bears. Leg 1, pull back, leg 2, trendline break here, leg 3. Wedge bottom, we already know that was testing the overnight session by looking at the 15-minute chart. And if we weren't looking at the overnight session, we could see that that's testing the breakout point from yesterday. 50% of bar 5, it looks like. Yeah, that's a good, that bar 5 had a lot of buyers waiting because it started a rally. I'm going to cough, give me 2 seconds. After we get the 3 legs down, that's a wedge bottom and a bull. I mean, you could argue we're not in a bull regime since that's the higher time frame EMA, but the previous 2 or 3 days have been bullish. We've also been below the EMA, but the majority of bars are above the EMA, so I'm going to say it's a bull regime. We're overlapping over the higher time frame EMA, so you can argue that it's a bear regime. Nonetheless, 3 legs down, trading range price action continued from yesterday, right? So yesterday's last 3-4 hours was trading range. We have 3 legs lower here. Oh, that was not the 3 legs I counted a second ago. And yeah, into support. And then the bulls start to rally. High of the day is the swing of 2 and 3. So that's the high of the day. Bulls get 4 legs into the high of the day. So leg 1, pull back leg 2, pull back leg 3, pull back leg 4. And at this point in time, the market cycle is range bound price action. The range bound price action is the end of the market cycle. The reason it's important to understand the market cycle is because that will tell us what type of breakout we're dealing with. If we're dealing with the first breakout here, this is the first breakout out of this range, we can be more aggressive and buy the close. If we're dealing with this second leg or the third legs, it's better to buy the dip in a bull regime. And when I say dip, I mean pullback. So here's 3 legs lower, leg 1, pull back, leg 2, pull back, 3, and leg 4, you could say, into support. Excuse me, rallies. So the later the leg, and the probabilities for trend continuation significantly go down in leg 3. So it's best to look for that leg 2. So we're gonna see this, and we're gonna think, okay, this should go at least 1 tick beyond 32. If you were in the live stream today, you saw me scaling into this, and I scaled in a little too aggressively. I'm not gonna do that again. Now I'm thinking back, that was real dumb. But I had a lot of conviction that this was gonna get a leg 2, 1 tick past 32, and I called that out. I called it like right here. I was like, we're gonna go 1 tick here. So I sat through some pullback. 48 made me pucker up, and then 54 I was debating. Oh no, excuse me. 43 made me pucker up. No, 41 made me pucker up. 48 freaked me out, and then as it closed, I was like, okay. I got out on, I think, bar 50. I was trading the NASDAQ, so the bars are a little bit different. I am trying to trade multiple products now. I'm trying to trade NASDAQ, gold, and if you saw what I did today, lesson of the day, do not trade correlated markets in the same direction. I got greedy and thought I was going to make double profits, and I got ticked out right here. I had a limit order to get long here, filled on 21, ticked out on 23, and it rallied. And it happened 2 times in a row at the exact same time, and I ate up all my profits because I was deep in profits. I was trading the London session. I was just thinking, like, how stupid do I look live streaming right now? That's the lesson of the day, guys. Do not trade correlated products in the same direction. Just, it doesn't even make sense. Today was the first day I was trading multiple products, trying to be in the markets a little bit more than usual, so I was bound to bump my head. I'm going to learn from that mistake quickly. It's going to be one or the other. Maybe I'll get along here, and then I don't do nothing on NASDAQ. Maybe I get along NASDAQ, don't do nothing here. But please, guys, if you're in the stream, you know what I'm talking about. I think Awin was sitting right there, and he was like, "Oof." Yeah, yeah, oof is right. That makes me laugh because it just sounds so stupid now. But in the middle of the day, in the middle of the trade, it just made sense. I was like, yeah, I'm gonna get double profits for going long. I should have just got 2 contracts on one thing. Doesn't matter. Let's get back to the price action. So again, market cycle is important to identify so we can understand what type of leg we're in and how to trade it. If we're in leg 1, we can be more aggressive and buy the close. For now, I'm just I'm not gonna even talk about what I'm doing because I was inconsistent today. Did finish the day green, which is cool. But I want to really get consistent with trading limit orders. But this was such a strong leg. I really thought we'd get one tick higher, and that's where I made most of my profits today. So we're breaking out of this range here. Traders will look for a measured move down, a measured move up of this bear leg, and that's met by the end of the day here. Bar, it looks like bar 56, maybe missed that exit, and then you get it back over here. So 1-to-1's met. We're looking at this as 3 legs higher, leg 1, leg 1, pull back leg 2, pull back leg 3, sideways price action, 1920, becoming climactic, going for a breakout. It fails. This is a type of triangle. 50% of the time, breakouts fail in triangles because there's two-sided trading. A triangle is also a trading range, and it fails. And then this breakout fails here. There's another triangle. The bearish breakout fails. 23, bad momentum. I actually got stopped out here looking for thinking that we were going to go like that and be in a trading range, but so I got double stopped out. Stopped out here, stopped out on 24. Kind of hurt, but sticking to trading breakouts and you will be profitable. We get it by the close rally, 24 through 29. Buy any bar and scalp out. The reason I say scalp out is because the probabilities for a pullback significantly go up after 3 bars in a row. And you actually do get that pullback 27, but the breakout was so strong it kept going. It's just an implied pullback here. This will probably be the price action we look at a lower time frame, just so we can understand what a buy the close rally looks like. Because there are three legs within this rally. Leg 1, pullback, leg 2, pullback, leg 3. Look at bar 29. It's climactic. It's just about the same size as the breakout bar. Bar 24 being the breakout bar. So let's measure bar 20. That's a little bit smaller. Okay, so bar 29 is smaller, but it's also the biggest bar out of 26 through 28. And when you get a big bar 3 legs higher, you gotta think sideways price action, and that's what happens. 30 through pretty much the whole day with sideways price action. And these last couple of days is a good example of the box I talk about a lot. I haven't talked about it in a couple of days, but let's say you have a direction. So this leg is giving us direction. So this could be a gun because we're trading momentum. So we shoot the gun up. The momentum gets spit around here. Now the bullet's bouncing around with more upwards momentum, and it usually typically will get spit out the same way. We do have more than 20 bars here. When we have more than 20 bars in a trading range, the momentum kind of resets, but we are in a bull regime, so I was favoring the bulls. And the last couple of days we've had a rally sideways. We've had new highs, new high, pullback yesterday. Failed to make a new high today. They made a new high. So think about momentum. I'm just very worried that one of you is going to slam longs thinking it's going to go here, and that'll be the time it reverses. Because we've had 3 legs higher, we're in trading range. We've been in a trading range for a long time, but leg 1, pull back leg 2, pull back leg 3, so we could go sideways. So be careful. Even though I said this momentum, it's all context based. We use the market cycle to just figure out what the context is, and then we use the leg count to figure out how we trade. Leg 1 and 2s, it's okay to be aggressive. Leg 3s, you want to typically avoid and just wait for a new breakout. I scalp, so I have a little more grace with trading leg 3s and 4s, but I still gotta be quick. The reason it's the best leg 2 is the highest probability trade is because there's 3 types of traders. There's traders who front run the breakout, there's traders who miss the breakout, and there's traders who bet on a reversal. And we can see all 3 of those traders in this dynamic right here. Excuse me, I had to take a breath. I was talking too fast. So the traders who front run the breakout, they buy low, they buy around this area, and then they get this nice leg up, and they think it's going to keep going. So they want to press their positions, but they're waiting for a pullback. They get that pullback, and they start pressing. First set of traders, they're the ones who are front running the rally. In this case, it's a rally. It could be a sell-off. Bears who sold 78 looking to press, but we're going to talk about the rally. So the first set of traders are front run. They bought early and they're looking to add to their position. Because down here it's a low probability trade. As the trend goes on, it becomes more higher probability, so they can put more risk on and move their stops to higher lows. The second type of traders is traders betting on a reversal. So these bears here are betting that this is nothing but a 2-legged, 3-legged pullback wedge top into resistance, and it's going to sell off. So they start to sell these bars. So now we have with trend traders who press early, and we have trap traders. The third set of traders, that's us. We are looking for a strong move and a pullback to add to get into our first positions. And that's the dynamic for why second legs are a high probable setup. There's three types of traders within that second leg. There's traders looking to press. There's traders that are trapped. Bears are going to have to buy back, because if you're short, to close your short position, you have to buy it back. So bears that betting on the reversal will buy back their shorts. So these traders are buying, bears are buying, and then you have traders like us who are looking for that second leg because we understand the first two dynamics, and we are also buying the market, which is what creates a very high probable trade becoming the second leg. This is why I preach second legs, trade the second leg, trade the second leg. And then I obviously, you guys see me scalping third legs like a dummy, which is not that bad. Third legs signify trading range behavior, which means not trend continuation. In trading range, you want to buy low, sell high. Like here, you want to start buying bear bar, scalping out, you could buy this bear, scalp out, buy this bar, scalp out, scalp. It's scalper's territory. Which is why I've resorted to scalping, because I missed the spike phase, but I get a lot more trades here. It is very frustrating. The last couple of days I've been a little tilty, missing this spike. I'm still getting used to trading limit orders. I've only been trading them for like 3 weeks now, so I like it though. My P&L's giving me a pat on the back. I could trade multiple products at the same time. Let's get back to this crap now. I shouldn't say this crap. That's the wrong language, but so we get to buy the close rally. We're in the third leg. We know it's becoming climactic. Leg one, pull back leg two. We're still within an overall trading range. So this could be a second leg trap 32. Sells off here. Bears get a few legs lower, but it's a very shallow. Leg one, pull back leg two, deep pullback for the Bears. Leg three, pull back leg four. Wedge bottom testing bar 28. And then we rally for the rest of the day, leg one. So here's the break. Here's the swing high. That's a bad drawing. Here's the swing high. Bulls go for a breakout of the swing high. It fails. Bad continuation. Pulls back, testing the breakout point 54. Strong rally here. Again, going for a new high. But we're after the third leg, it's very probable that the market reverses. Leg one, pull back. Leg two, pull back. Leg three. Leg one, pull back. Leg two, pull back. Leg three. Leg one, pull back. Leg two, pull back. Leg three. So if you guys were buying these highs expecting a rally, there's so many third legs going on within 66 through 71, and nonetheless, leg one, pull back, leg two, pull back, leg three. So you have an overall third leg into this bear flag here, which we can bear pull, I guess. Now it's a bear flag. And I'm not trying to say we're going to sell off. I'm just saying this shape right now is a bear flag. I'm not saying get short here. There is a lot of overlap. This was a broad channel. The last big move was a sell off to a gap down. Bulls have filled the gap, so now they're going to go for the next climax up here. They're going to target each swing point. I'm trying to stay focused here. So we counted up to the legs here. That's a wedge bottom into support, and then it rallies. Really, really weak rally, 48, 49, 50, 51. It's a weak rally. What the heck? How does that happen? Another wedge bottom, 51, pull back, inside bar, pull back, pull back into oblivion. I don't know why I said it like that. Leg one, pull back, leg two, pull back, leg three, pull back. Leg one, pull back, leg two, pull back, leg three. Wedge bottom, testing the breakout point 48, 3 bars in a row. These are 3 bull bars. Looks like it gets continuation, but look how long. For a 15-minute rally, if it had good momentum, it shouldn't take 40 minutes, right? 15-minute rally with a 40-minute pullback, something's off. Nonetheless, you can buy the EMA, you can buy the breakout point, because this is staying true to buy low, sell high. Rallies, leg one, pullback, leg two. Sells off 72, strong leg down, leg one, pullback, leg two, pullback, leg three, pullback, leg four. Leg one, pullback, leg two. 75 is climactic, testing the breakout point here, and then we get that second two-legged rally here. Leg one, pullback, leg two. 20 minutes. I just want to go over this, and I want to do it the same way we did yesterday. I'm going to draw this here. How the heck did we do it yesterday? Oh, yeah. Screenshot this. gonna shrink this. I'm gonna go to the 1 minute here. I'm gonna put this on the right side of the screen, put this on the left side of the screen. This is the 5 minute chart, this is the 1 minute chart, and what we're gonna do is see how this rally is climactic because it has 3 legs within it. Then we're gonna put a ribbon on it and call it good. I have to go over the measured moves and gaps too. Cool. So 23 is this swing low here, bar 112. Rallies for first leg, strong first leg breakout to about right here. Man, someone gave me an indicator to add the numbers from here to here, so it's the same, and I'm gonna have to do that if we're doing these rallies so we can get really really surgical with these talks. So first trend line break, hold on. 27 almost breaks it. So this wick here is this tail here. 27 is this section of bars. Creates a double bottom, higher low, rally. So here's the legs, leg 1, pull back leg 2, pull back leg 3, climactic price action. So this is 3 legs. I counted it as 2 earlier. Leg 1, pull back leg 2, pull back leg 3, wedge top, leg 1, pull back leg 2, pull back leg 3. Look how the bars are shrinking too. Really nice, strong rally. You think that's going to get continuation 29, and it does. It gets continuation in the form of 2 legs, leg 1, pull back leg 2. Then we get a 3-legged pullback, leg 1, pull back leg 2, pull back leg 3, testing the breakout point, 159 being the last bar in the trend. Then we go sideways. So that's 3 legs higher, leg 1, pull back leg 2, pull back leg 3, leg 1, pull back leg 2, pull back leg 3, and then we have 3 legs, leg 1, pull back leg 2, pull back leg 3, and then look at the bears, leg 1, pull back leg 2, pull back leg 3. That was sloppy drawing. So you guys see, it's pretty important to understand fractal price action. Again, I don't look at the 1 minute chart during the trading day. I think that could hinder your trading because you're going to start to hit out, reverse, blah, 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 blah. It's best to just understand it from a visual perspective, acknowledge this is a pullback, acknowledge this is a pullback, and then later in the day, make a slide or two about it. If you make a slide, put it in the Discord. I'd like to see them. I've been pretty lazy when it comes to making slides. I've been doing a lot of other work when it comes to trading, not necessarily price action related. I've been, I talked about yesterday, psychology crap. Let's go over the measured moves. This thing's tipping over 20 minutes. I like to keep these around 20 minutes. A couple days now. Sipping on some scissor. Okay. Measured move from yesterday. Top of the pullback, bar 2. That's met here. Climactics, bar 7. You have to get out. Bears will be taking profits. This is a climactic bar. If bears that short 78 here, their stop is up here, so they don't want to have 30 points risk open. They're gonna have to reduce their position and look to scale in later. And what happens when they scale in? They get trapped here, and again, that's the second dynamic traders. They're trap traders. We saw the measured move higher, leg 1. That was a bear leg at the start of the range. That was met around this bar, and if you miss that exit, you get another chance. You get 2 more chances, so pretty good. Measured move of this, I'm sure everyone wanted that. I was kind of looking for something like at the 50%, but I hit out here because it was 1 tick past this. Measured move never was met, but the 50 after this rally, you got to ask how much is left in the markets, and it just went to about the 70%. So if this is, you guys get what I'm saying? So this is 1R from here to here. 50% is right here. 70% is right around there. So 30, 50, 70. It looks like it made 70% by the time we get to bar 78. 3-bar microchannel, but 41 is a trend line break, so we're not going to count that. 3-bar microchannel, 48, 50, 51. You guys know by now there's bull bars within this tail, so I'm going to count that as a bull bar. I'm counting 48 as a bull bar. That's what I mean. Put that here. I didn't take these trades. I'm scalping, but I'm just showing you guys because I started out. I found success trading 3-bar microchannels. So I don't know where everyone's at in the trading, but there's your 1-to-1. I suggest you start to scalp out when bears get 57 bad follow through because look, you could just scalp. You could take this trade, scalp out, and buy 66 again and catch even more. Complete the leg. At the end of the day, looks like 72 through 75 should get a second move, but it doesn't. It actually creates a higher low double bottom with 66, and we rally for the rest of the day. All right, guys. If you learned something, share the show. I always appreciate it. Tell your friends. I'll talk to you guys tomorrow. I'm gonna be live streaming. I gotta get more disciplined. maybe trading multiple markets. I want to trade gold, NASDAQ, depending on the micros. If the setup looks better between the micros and NASDAQ, that's what I'll take. I'm not trading correlated markets in the same direction. Again, I have learned my lesson, and I'll be looking to trade. Yeah, so NASDAQ, gold, oil. Those are all three uncorrelated markets that all have breakouts. So I'm a breakout trader. I'm looking to take as many trades as possible. I will talk to you guys tomorrow. I appreciate you guys keeping me company today. Have a good rest of your day, everyone. Thank you. If you learned something, share the show. Thanks for your support. If you want to join the Discord, invites in the comments. And in Discord, my name is Ding Dong. It's not price action breakdowns. I'm not going to ever solicit any money from you guys. I'm not asking for group mentorships or anything. So if you guys get messages from random people, that is not me. You will know if it's me. In Discord, my name says admin somewhere. I guess it doesn't. But that's me right here, Ding Dong in Discord. It's pretty fun. People talk about Tom Hugard. We had Dan share this today. So I think that's really important for people to understand breakouts. You guys have a good one. Talk to you tomorrow. If you stuck around, I appreciate you. I appreciate you even if you didn't. You guys have a good one. Talk to you later. If you learned something, share the show. Bye.